stock market crash further in 2020? Hi, this is Ramalingam from Holistic Investment Planners. Most of the investors ask me this question after the March 2020 stock market crash. Will the stock market crash further in 2020? Let us explore. To give you a background, market was at 41,000 levels in January 2020 and it slowly crashed to 25,000 levels in March 2020, and again it slightly recovered to 30,000 levels in May 2020. Because of COVID-19 economic crisis and lockdown, will the stock market crash further or not? Some set of investors ask me a question: the market has bottomed out or not? Because I have more money to invest, do I invest that now or do I wait for the market to bottom out and then I invest? There is another set of investors, they ask me a question: can I exit now from the stock market and reinvest when the market bottoms out? Let us find out what as an investor you need to do. In the meantime, please mention in the comments about your view on the way forward for stock market. Will the market recover from here or will the market crash further? In this video, first we will see the market crashing further if there is a possibility. Second, we will see the possibility for the market not crashing further. Finally, we will see what as an investor you need to do in this situation. The possibility for market may crash further. The lockdown has negatively impacted sales and profitability of most of the businesses. Some businesses have to redesign themselves to accommodate social distancing, work from home, and some businesses have to redesign their product delivery model. So when the quarterly results or annual results are announced, and if the results are poorer than expected, will the market realize the poor results and correct further? Yes, there is a possibility for market may crash further if the results are poorer than expected. Yes, there is a possibility. Now let us see the possibility for market to not crash further. Share prices are always forward looking. So the present prices could have factored in the expected poor results in the coming quarters. Also, as the markets are forward looking, the market may have the ability to foresee the economic recovery that will happen in the near future, that is after a few quarters, and bounce back now itself. That is also a possibility. In the midst of this economic crisis, there is a bright spot, that is the fall in oil prices. As we are an oil importing country, it will immensely benefit us. Also, the 20 lakh crore economic package announced by the government will definitely help in restarting the economy. Therefore, the possibility for market crashing further and market not crashing further and recovering both exist. So, what do we do now? Instead of asking the stock market has bottomed out or not, the right question to ask is the stock market is undervalued or overvalued. One of the indicators suggested by Warren Buffett to find the market valuation is market capitalization to GDP ratio. If the market capitalization to GDP ratio is between 50% to 75%, then the stock market is undervalued. As on April 2020, the market cap to GDP ratio was at 60% on BSE Sensex. Historically, when the market cap to GDP ratio was between 55 to 65%, then the market has delivered 15% or more CAGR for the next 3 years. Market has the potential to deliver such returns in the next 3 years also. So, you can stay invested in the stock market, and if you have fresh long term money, you can invest now because market is undervalued. But still, if you are not convinced about staying invested or investing more, but wanted to time the market, time the market bottom, then you need to definitely go through this analysis in detail. This is an important analysis on US S&P 500 index performance between 1999 to 2018. 20 years of data has been taken into account for this particular analysis. During this 20 years time frame, the US stock market has delivered 5.6% annualized returns, 5.6% CAGR to all the investors who have stayed invested on all the days of 20 years. Suppose if some investor has tried to time the market and missed just 10 best days, then the return has come down to 2%. If someone tried to time the market and missed just 20 best days of the market, they would have ended up getting 0.3% negative return. Most of the times, timing the market becomes counterproductive. You must be knowing the Pareto principle of 80-20. That applies to stock market as well. As discussed in the previous slide, 80% of return comes from 20% of the time you stay invested. Predicting and forecasting those 20% of days is practically not possible. This is what reiterated by many experts. I am just sharing here two quotes from the experts. The first quote is, those who have knowledge don't predict, those who predict don't have knowledge. And the second quote, and it is about forecasting. We have two classes of forecasters, those who don't know and those who don't know they don't know. As this clearly explains, timing the market, timing the bottom is practically not possible. So what do you need to do as an investor now? Stay invested in the stock market because market is undervalued right now. One more reason for you to stay invested is, otherwise you may miss a few best days of the market and miss the best returns from the market. If you have fresh money which can be invested for long term, then stagger your investments for 6 months to 1 year time frame, so that even if market crashes further, you will be in a position to take advantage of that as well. If you have any questions on stock market crash, recovery or mutual fund investments, you can take advantage of our complimentary consultation. The link for complimentary consultation is given in the description. If you find value in this video, please like this video and also share it with your friends to whom this will be useful. To get notification for our future videos, please subscribe to our channel. Thank you so much.